Welcome to TradeTheMBI.com. This is John's report is for the 16th. Well, looking at our chart, we continue to see that expected climb upward slowed a little bit. We are seeing MBI white moving up significantly, but that's only going to be relevant when we get the magenta fade lower, and you can see midterm buyers from the green rising nicely, as is the orange. Short-term buyers fading off a bit here at the peaks, and we're at 21 on the shakeout. I highlighted the extreme histogram. I didn't like how shallow the color was because it's so important. Because when we look at that extreme and we start with the red uh, lines right there, we know our retrace value for the beginning of any sell signal is going to be down at that 4113 range. So it's important to have that in place from an NQ standpoint, virtually identical to what the readings are. Actually, I think it's a little bit stronger from an MBI reading from a magenta standpoint. Shakeout continuing to rise, slightly lower than the S&P at only 18 for the shakeout histogram. Euro continues its slide, and that's held up as long as it has been remarkable. We'll see what happens when we get down again towards parity levels. That will be an interesting one because they've been stepping in each time, trying to get it back above. They need to get it back above that 104 range, um, back where it was here in June. That's typically where they want to be at least stable, minimal stabilization, because as soon as it breaks parity, there really is no stopping it if they don't intervene, and they can only do it for such a minimal period. So, and when I say they, we all know who we're talking about because individuals aren't doing that. From a gold standpoint, a little bit of a soft peak there. Again, they read some of the manufacturing numbers in that, and it was an absolute collapse. So this is that mixed narrative that we're starting to get. What's the real story? Is it the economy is great? Is it contracting? Uh, it's a difficult one because there's a lot of dynamics at play, and it could go either way. But the policies that we see being implemented really don't point to that. From an oil standpoint, dropping all the way back down to its lows again, so easing that inflation. But some of this is going to be a question of, is it reduced demand? Is that month after month of higher food prices, everything else starting to eat away at people's ability to actually, do things? Treasury standpoint, a little bit of pop back up, but again, this should continue to move lower simply because rates have to go. Of course, that softening in manufacturing, maybe the Fed eases, unlikely. That's not going to be significant enough for them to make a change. Bitcoin, always nice to show it from a daily standpoint when we talk about these nice little moves of 1,000 or so dollars, but relative to where it was to what has happened, the crypto winter started early and has continued through summer. So they're still in their version of an ice age. ETH, again, I still love it though from an intraday standpoint. It trades beautifully to the algos, and you can get some really excellent rides from that. So it's good to see it. From a 50K standpoint, we're in that secondary upswing, and magenta turning back up again on that, and still only at 5 on the MBI white. So not exactly super weak in any way, shape, or form. We have red trailing off, so DOC red could be resetting here, and that would create, beyond the P2 that developed right here, to a secondary higher pivot if it turns up. I particularly watch that zero line. Breach of that zero line is usually a little bit stronger decay. And from an ES5K, we actually don't have the entire day on the screen. That just shows you how large it was. Beautiful readings from the beginning, the turn down, and then the flip back above. That beautiful DOC orange dip right there. Love that every time. And then coming back up, the breakdown below the 33 with MBI white spiking. In this particular case, dark magenta here being representative of the fact that we're still cyan under red, which is always a buy, particularly when it happens. But then we begin to look at some of these decay factor potentials. And then the DOC spread literally taking place bar or so later, and actually relatively the exact same price. And that gave us a move back down to the 50%. And we did it the secondary time with the white MBI leading. But then things turned around one more time with that magenta over and blue over the gray. At the same time, we had orange dip below green, DOC. DOC already had the green crossover from a buy standpoint. We were looking at negative shakeout at that particular point, but it becomes pretty clear that when you have the expectation is that the momentum should continue. And sure enough, we pushed all the way up through and into new highs. But post market, and again, well, see, this one's not dark enough on my extreme. So if we edit the extreme, this is what I like to do. I just increase the weighting of the lines, and that just makes them darker from a visibility standpoint. That's just a preference. So bingo, instantly darker. So we can see retrace value right about there. Actually, we'll just go ahead and draw that horizontal line right there so that we can see it. And then you have a series of continuation all the way through. Now, I think we've already come back to, the secondary red. And that happens a lot. When we get a nice strong up move, you'll get the second bar really fills cleanly. Then, depending on your readings at that particular stage, whether or not it bounces a little bit before finally filling to the ultimate one. But that's usually the first marker that I'm looking at, is that second red extreme histogram. And then from there, it usually begins its decay. So there you have it, long and the short of it, under the new video format. Hopefully you're liking it. Any suggestions or changes that you think needed, please let me know. On Skype chat, we'll continue to update relevant configurations of that. Trade well. We'll talk again later.